And welcome. This is Mary Ellen McGonagle, and you're watching the MEM Edge Show, brought to you each and every Friday afternoon at 5 p.m. Eastern Time. And this, as I like to say, is the show where we put you in front of where the action is in the broader markets. And I probably have said this before, but certainly this week qualifies as one of the more active weeks. And unfortunately, not to the upside. What a difference 5 trading days can make. So lots that we're going to cover today. The first, of course, is we're going to drill down and take a look. Where the heck are we with these markets? We're seeing declines on a weekly level that we have to go back over 10 years before we've seen that before. We'll get over and get into all of that as we take a look at where we are now. And as usual, with an eye toward looking toward the future. What do we need to be on the lookout for? And how are we as far as being in good standing or not currently? We're also going to take a look at stocks that may benefit from the coronavirus. And there is a pocket within the markets that are withstanding the downward pressures. And this will all make sense as we go through. I have over 15 different stocks that we're going to take a good look at. Safe haven yield stocks, and that is an area that may or may not continue to withstand, but we'll take a look there. And then also bottom fishing. And now this is going to be for those of you investors that have a bit of a shorter term outlook in your trading. In other words, you're nimble and you are comfortable getting in and out of stocks in a relatively fast fashion, given where we are in the markets. One other thing I did want to mention before we get into the program is that I will be participating on a panel this week. And on the 3rd, I will be teaching trading and investing. It's for everyone that is interested in learning. It is going to be from beginner to somewhat advanced. So I urge you to go ahead and check that out. There will be a tab below this video, and you can go ahead and register. If for some reason you can't make it, you will be forwarded a recording. Lots of good female educators that are going to be a part of this panel. So please urge you to check that out. Okay, let's dig in, take a look at where we are in the markets. And this, of course, each and every week, we want to look at that heavyweight S&P 500 index. And what I'm sharing with you now is a weekly chart. We can go ahead and look at a daily in a minute, but a couple of characteristics that I did want to share with you. And for those of you that are subscribers to my MEM Edge report, my biweekly report, I this week had reports that went out every single day. Usually it's just Sunday and Wednesday, but because of the market dynamics, we were on top of the markets very much, as well as the individual stocks on our suggested holdings list. So this was included in one of the reports that made it out this week. And it really was before we saw this break below this 200-day simple moving average. When this report went out, we had broken below the 50-day, which those of you that follow my work, that is very, very relevant. A break below that 50-day is negative, and it did occur on volume. Again, we're going to take a quick peek at a daily chart, bring that to life for you. But what I did want to point out with this weekly chart is when you see the broader market indices break below that 200-day simple moving average, that is where the it can potentially foretell future declines. Of course, none of us are fully aware of what the markets are going to do, but we can certainly use history as our guide. So when we examine this break below this 200-day on the weekly chart, it's actually a 40-week is the indicator that you will want to use. And we can see, take a look at this big volume, very, very big volume on that decline. That could indicate one of two things. We're going to take a look at the bottom in December during that bear market, the characteristics there relative to where we are right now. But more importantly, on this weekly chart, take a look when that price broke below that 200-day. We also had this weekly RSI break down below this net neutral 50. And then we also had the moving average convergence divergence, MACD, another momentum indicator, black line down through the red. And in essence, it was foretelling further near side downward action. So let's go ahead and move forward and take a look at where we are now relative to that. We can see that, in fact, the RSI has broken below that 50 on the weekly. It is in negative territory. And then we do have that black line down through the red. So for all intents and purposes, the near term still looks that we may have a little more work to do, at least before potentially turning. Now let's go ahead and take a quick look at that daily chart so I can point out some other characteristics that are very, very relevant. And in this case, this is the S&P 500. I have this 10-day simple moving average, and the red is your 50-day, and the blue line is the 200-day simple moving average. Here is that break below. And we can see that this is yesterday's volume. That's when that break below the 200 did occur. We did get some fairly bullish action in the markets today. We're going to take a look at the NASDAQ. That will help you formulate that even more clearly, in the sense that the markets were down over 2% at certainly at the open, but we did close up here down less than 1% on big volume. That is bullish action in the sense that we closed the day in the upper reaches of the trading range for the day. Another characteristic that could point to a potential bounce into next week is taking a look at this RSI on the daily chart, and we can see that it is down below 30. That's indicating that the markets are oversold. What we can do is go ahead back to the end of 2018. See if I can blow this up, because I do want to show you a couple of other characteristics that are going back to that. Well, I think this will suffice. So we can see back in that late December period that we did also get into an oversold position on this RSI. One other characteristic I did want to point out to you, going back to this late December bear market period, what I'm highlighting here is the what I would call capitulation that occurred, that was a precursor to the markets bottoming out. What we did see on December 21st was the markets, they did decline on that day. But what I wanted to point out is you can see this volume bar here. And for those of you that are familiar with my work, certainly, I do pay quite a bit of attention to volume characteristics, because they can be very, very telling, particularly as they relate to the broader markets. And so what we had occur here was that down day on the 21st, the volume was 200% above the average volume over the last 50 days. And that was the precursor to the following days bottoming. We dipped just a little bit below that 21st and then closed the day up. And that was an indication that this downtrend had reversed. Certainly, from my work, I was not quite ready to jump in. I would want to see more confirming action, in the sense that your other indicators are flowing in an upward fashion, positive. The indexes are above key areas of resistance and so forth, but certainly using history as your guide, that volume was super, super powerful. So we can see today that while the volume characteristics appear to be very, very high, and they are, at the close, it's about 100% above average. So we're not seeing that 200%, that just everyone is either selling or buying on the dip. It is nice volume, certainly well above recent average, but not anything that would point to a character change, so to speak. Now, I also would need to see other characteristics take place before jumping back into the markets. But as we proceed, you're going to see that there are some areas that are percolating. And again, those of you that are more nimble traders that are not adverse to the risk factor may want to take a dip. We'll see as we proceed here. But again, we can see here that we have broken that very really critical barrier here at that 200-day. And from here, what we are going to want to look for are recent bottoms, certainly lows back here. You want to take a look at lows prior to this as areas of potential support. So there's your broader market index. What I do want to do from here is go ahead, drill down a little bit further. It's not going to be pretty, but we are going to take a look at those 11 S&P 500 sectors, as well as the S&P 500. This is that candle glance view accessible very easily from StockCharts.com. And each chart here is a 2-month snapshot. And I've gone ahead, as usual, added the relative strength indicator, that momentum indicator. Then I'm going to sort it in descending order. I'm going to go ahead and update this view. We want to see where the potential outperformance was among these 11 sectors. And let's take a look. Very interestingly, technology is up here in the forefront. It was not the best performer for the week. It was down almost 11%. But today's action, let's go ahead and pull this out and take a better view here. We can see this is XLK, the technology sector, and it pulled right back to this upward trending blue line. We're on a daily chart, so that's your 200-day simple moving average, and it found support. This XLK actually closed up for the day, almost 0.75%. And we're going to take a look as we drill down further into some of the industry groups that are really rather interestingly pulling right back to support, and buyers are coming in. So that's very constructive. We see now that technology is acting a little bit better. It's up here in the forefront. And then some of the more defensive areas, REITs, XLRE, XLU, these are higher yielding, normally very wonderful proxies, certainly given that we are seeing interest rates hitting historical lows, as U.S. Treasuries are very safe haven, very popular at this point in time, not just because it's the United States, but the Treasury rates in the U.S. are the highest, certainly globally. And so these are up here in the forefront, however, not unscathed. Utility stocks were down 11.5% and real estate down 12%, but they are still showing up here in the forefront. We can see that same type of, if you will, bottom fishing that took place. Now, XLRE did undercut, certainly, yesterday, that 200, but on today's action, it did trade down quite a bit, and then it closed in the upper portion of the trading range for the day on absolutely tremendous volume. So that's indicating that buyers are coming in and supporting those stocks. We're going to drill down, take a look in that group, as well as some of these other groupings as well. But let's take a look. Your worst performers down here, energy down 15%, just cannot get off the mat. It is very much underperforming. And then interestingly, staples, they were not down the most for the week, but we can see that overall they had not been outperforming in previous weeks. So any kind of deterioration would certainly push it down to the lower performing area. We talked about this last week. Normally people would look to staple stocks as a safe haven, and not the case this time around. So there's your view as far as the broader markets and the individual sectors. Let's go ahead and take one other really focused look at these markets. And this is another 2-month candle glance view. And then we've added in some other industry groupings that are always of importance. My work, I focus on these higher growth areas, but I've also gone ahead and put in the transports. We want to see volatility index where that is residing, as well as the Dow Industrials, the NASDAQ, and then small cap stocks as well. As a matter of fact, I'm going to take out the oil and go ahead and put in that small cap IWM, and that is the ETF for the Russell 2000. So here we are again, RSI descending order, and good old VIX up here in the forefront again, and the VIX up here at 40. I'm going to show you a little bit of historical precedent here to make even more sense of this, if you will. But you can see that it spiked up here almost to 50. And this is also very much an indicator, because for the week, the VIX index was up 135% from that 22 up to above 50. And this type of spike in volatility, as well as the very swift drop that we've seen in the market, is really telling you just how uncertain investors are as to the impact of coronavirus on global growth prospects. The fear is real. It's there. So what we can do is go back to this, the end of this. This is taking us to 2018. For those of you, this is actually the beginning of 2018, and it is a period of the market that was similar in the sense that going into 2018, the end of 2017, stocks were having these parabolic moves. Let's see if we can just pull up one quick stock, share with you. This is Google. It's not really as dramatic, certainly as I recall it, but we were hitting new highs, and a lot of these higher growth stocks, the FANG stocks, were just marching to these huge moves before valuations. It got overvalued, and we had that drop in the beginning of 2018. More to the point, that historically we are at a peak here. So this is another indication that we could potentially see a bounce next week as this volatility fear just spikes and potentially recedes just a bit. We can see that it did fade into the close today. Going back to that candle glance view with some of these other various industry groupings, I'm going to go ahead and update this sort again. What I wanted to point out to you is even gold stocks were not immune. They did see a dip on the as we saw the broader markets rally a bit. And then we can see up here in the forefront, I'm going to blow this up as well. This is definitely worth noting. This is the semiconductor index. SOXX is the ticker symbol. And semiconductors were the first to get hit. They got hit the hardest at first glance when the coronavirus was announced. A little bit of a rally, but then another dip. Now, these stocks are very much reliant, the companies in this ETF are very reliant on the Chinese economy getting back on track, because many of these semiconductor companies do derive a good portion of their income from China. So very interesting to me is the fact that this semiconductor index really held in well. If you were to go through and take a look at each and every S&P sector, every one of them has sliced through this key support, this 200-day simple moving average. Semiconductors just dipped below it and actually closed up 2.4% for the day. And that is super interesting to me. I'm not seeing other confirming factors on this daily chart that would get me jumping in just yet. But again, for those nimble investors, we're going to take a peek into those semis. Let's go ahead and drill down further into some of these other groups. I talked about one area in the market that is actually holding in. It's all going to be relative, but this is your biotechs. IBB is the ticker symbol, and it was down 7.5% for the week. On any normal week, that would be a very severe downdraft. But given that the broader markets were down over 12%, biotech stocks were clear outperformers for the week. And that's going to stand true because not only are a number of coronavirus potential cures, vaccines, and so forth in this group, I'll tell you, I dug into the biotech area, took a look at some of those bigger movers that have high scooter ratings, and it is not all about coronavirus. It is a lot of them are cancer related. They've come out with good clinical trial results, earnings, and so forth. So very interesting to see this vibrancy here among these biotech stocks. Again, finding support at this 200-day simple moving average. And then we can, of course, just drill down from here, because another area that is holding up fairly well is software. That's IGV is the ticker symbol. It was down less than the broader markets, down about 10%. And we can see that same dynamic taking place where the software stocks, IGV, pulled back down to that 200-day, and this is another area. It closed up 0.5% on the day. So very interesting potential bottoms forming. We are certainly going to need more in the way of information to go ahead and confirm that. I'm going to have to take a brief break here, and we will be right back. And welcome back. What we're looking at here is a 1-week view of just quite simply the performance of the sectors for the week. We can see a lot of red, but I did talk to you about the concept of potentially bottom fishing. And I'm going to show you actually three ways that you can uncover potential candidates and where to look for the charts beyond that. So when looking at this 1-week performance, what can be helpful is to go into today's performance. You can do this on a daily basis and take a look at what areas are seeing support in a day that is generally not positive. So we talked about the technology sector and semiconductors as being an area that was up 2%, finding support. Drill down to that industry grouping. Now we're looking at the the stocks within semiconductors, and it is currently sorted by that percent change. And that can be interesting. From my work, I am going to be more interested in the better rated StockCharts technical rating. This is your scooter rating. And this is a stock that is actually still on the MEM Edge suggested holdings list. It's been a real winner for us. But let's take a look at the chart that on the open today could have gotten you certainly interested or looking at this. We can see that it undercut the 50-day simple moving average, closed the day up almost 7%. But from my work, if you are looking for a much shorter term trade, you are going to want to use the intraday. This is your 60-minute or 1-hour price chart. Each bar here is 1 hour, and it's not pretty. This is going to be true about pretty much most stocks out there. The sell-off last week was not discriminatory. It just hit a lot of areas. But I want to show you the dynamics that you want to look for that could indicate a very short term. But I also want to warn you that you can get false signals, such as taking us back to a couple of days ago with NVIDIA. In essence, you want the break back above these simple moving averages. In this case, we're looking at a 5 and a 13, and the break back above that on volume, simultaneously a break of this RSI into positive territory. And then with the moving average, the MACD, quite simply, this black line up through the red is going to be enough of a positive signal on your intraday, certainly even more positive when it breaks up above this 0. So let me go ahead and share with you what we are on the prowl for. Back in the beginning of February, that same dynamic breaks up above these simple moving averages, MACD, RSI, turn positive, and that is what you want to look for. But really, realistically, these type of big volume bars, as opposed to this tight trading action, is still indicating that there are signals that there's just a bit of sloppiness in the markets. Again, that uncertainty, that fear. This is LAM Research, LRCX, another one that has broken back above the simple moving averages, RSI poised to turn positive, and your MACD. Now, that's one way that you can uncover these potential super short-term trades. Here's what you're going to be on the lookout for to tell you that that uptrend is over. Quite simply, it is the opposite. The price breaks below the simple moving averages. You had this early signal black line through the red that was telling you that the uptrend momentum had shifted, and then the RSI trades down. So you need to know your exit strategy, of course, as well. Let me share with you another way that you can you can do this on StockCharts.com or any other service provider that you might have. Quite simply, very simple screen. This is I'm asking that all stocks, show me all stocks that were down at least 10% on the week. And that's not going to be hard because the S&P was down 12%, but they were up today. And so from that listing, we have 203 stocks that emerged from there. I like to then sort it by market cap. And then from here, you can go ahead and see which stocks potentially could be reversing their downtrend. So we can look at GE, Qualcomm. For charting, it is, for me, all about StockCharts.com. They have the best charts. So Qualcomm, take a look, potentially reversing that downtrend, those same dynamics. So that's another way that you can screen. I did not want time to escape before covering some of these coronavirus plays that could potentially outperform. So I mentioned I had a lot of stocks, but I'm going to zero in on those that are the most interesting. NVAX is one. That's Novavax. The reasoning is because, and we can see, certainly, no doubt, I didn't realize it's up 35%. I did put this list together yesterday. But the bigger point is when you're looking for those coronavirus plays that could really continue to do well during this period and beyond, it is going to be those that provide vaccines. That is the one theme that is developing in the sense that there is going to be a need for vaccines going forward, not just a demand now. It's going to be an ongoing annual vaccine that is being portrayed or looked towards. So NVAX, they launched a program for the Wuhan coronavirus vaccine. The reason I'm interested in this one is they've already have a vaccine developed for MERS and SARS. So that, in my mind, puts them ahead of the pack. VXRT, this is another one. They are in clinical trials for oral vaccines. Their advantage is that pretty much every analyst out there is anticipating that these guys are going to come through. Again, this intraday is going to be 60-minute for these faster movers. That's going to be the chart that will help guide you. And let's take a look at another one, XAIR, and that is Beyond Air. They're developing a nitric oxide generator to deliver to patients. It does have antiviral properties. Again, a lot of these have had these big moves already, but XAIR has broken out of this nice base. Take a look at these volume characteristics. So we could see the stock continue to advance. I can share just a couple more stocks here with you that are in this area. CBLI is Cleveland Biolabs. Now, this is a bit thinner. It is a $4 stock, but it has this forming this nice base, nice volume characteristics. One last name that I can share with you that it's not necessarily medically related, but LAKE is Lakeland. They provide protective gear. We can see it is already quite out of the gate here, but APT is another one that provides face masks and so forth. So these are stocks that you could certainly take a look at, put on your radar. And then for those of you that have not done so already, please take advantage. I have a 4-week trial of the MEM Edge Report for $7. I will keep you alerted when it's safe to get back in the markets and the best stocks for you that are going to outperform the markets when they turn. I'm going to leave it at that. Everyone have a great weekend, and we will see you next week.